Ty Crandall here with Credit Suite, and I'm glad to be joining you today for a topic we've never talked about here on Facebook live streams, which is shelf corporations. So I still get a lot of people ask and inquire about purchasing shelf corporations. Does it make sense? Can it help you in any way? Can shelf corporations help you build business credit? Are there goods? Are there bads? I get these kind of inquiries all the time. So I wanted to do today what I've never done on a live stream before, which is decode shelf corporations. We're going to talk about what they are, how they work, whether there are some legitimate uses, which there are, what you should know and to avoid with using shelf corporations, what they may help you do, what they may not help you do. We're going to get into all of it. So Michael, thanks for coming in. I appreciate you joining us today. So a lot of things we're going to be doing today. We're going to be decoding everything that you need to know about shelf corporations. We're going to be debunking myths. You're going to know maybe the uses that it does make sense and definitely the uses it doesn't make sense, so you don't spend thousands of dollars on something that won't deliver you what you'd like for it to deliver you. So today we're talking about how to stay out of business credit jail using shelf corporations. A lot of details we'll dive in. So let me see if I can figure out how to flip this around and we'll go live. So here is the topic at hand today, okay? How to use shelf corporations and how using these things can actually put you in business credit jail. What you need to know to avoid. So first of all, let's talk about what shelf corporations are. So when we talk about shelf corporations, we're talking about corporations that are purchased and basically put on a shelf for. So shelf corporations are definitely different than shell corps. Shell corporations have a whole different meaning, a whole different purpose. But when we talk about shelf corporations, we're ultimately talking about corporations that were purchased and basically put on a shelf just for the purpose of gaining seasoning. So this means somebody went into a state like Florida, they went to the Secretary of State, they paid the $70 that it cost to set up a corporation here, and then from that point, they actually have a physical business entity. They have a corporation named ABC Corporation. Then what they do is nothing. They don't do anything. They then just basically let that corporation and entity sit in season, grow time, so eventually down the road it can be sold for some kind of value. So that's what a shelf corporation really is. It's an entity that's purchased, such as a corporation in the state of Florida, that nothing is ever done with it, and then 2, 3, 4, 5 years later, then it's sold back to somebody else, showing that the value of the corporation is the fact that it has seasoning, that it's been around for a long time. So when we talk about shelf corporations, that's what we're definitely talking about. We're talking about corporations where somebody purchased an entity, they put it on the shelf, they didn't do anything with it, and then the intent is to probably come back and use it for some kind of seasoning purpose. Okay, so these are used for a couple different reasons mainly that I've seen. First, they're used for contractors, and they're also used for people, I've seen in a lot of cases, looking to build business credit. Contractors and building business credit are the most two common things that I see shelf corporations use. On the contractor side, there's some legitimacy to using shelf corporations. Because, for example, if you're a contractor, you might bid on government contracts, for example. And the government might say, look, you can't even bid unless your entity has been in business for 1 year, 2 years, 3 years. Well, using a shelf corporation, you then can get an entity that's been in business 1 year, 2 year, 3 years. So shelf corporations for contractors actually do have somewhat of a legitimate purpose, because they can actually be used for your business to have the seasoning, and you're using the seasoning to bid on actual contracts you couldn't bid on unless you actually have the seasoning. So from what I've seen, that's about the only legitimate use of shelf corporations, is if you're getting it as a contractor to have a business that's seasoned enough to bid on certain jobs or to bid on certain contracts. Now, the second thing I told you that shelf corporations are commonly used for, hello Edgar, thanks for coming in today. The second thing that I commonly see shelf corporations are being used for is business credit building. And Gabri, thank you very much for sharing. I appreciate this. And everybody else, Anderson, Gabri, again, thanks for sharing, and everybody else, thanks for sharing. So shelf corporations, again, for the purpose of business credit building, not so much. Okay, so if you're a contractor using it for bidding purposes, yes. If you're in the business credit and you're trying to build business credit, it really doesn't help, and I'll show you why. Shelf corporations don't really help because, shelf corporations are, the time in business isn't really the main factor used in business credit approvals. The number of trade lines is the main factor. So what I'm saying is that, why would you use a shelf corporation for business credit building? Well, because a lot of people are led to believe that the time that you're in business has something to do with your ability to build business credit. That's just simply not true. We see startups and help startups every single day by the thousands build business credit. Okay, so the business credit isn't based on the time that you've been in business. It's based on the number of trade lines that you have. Now, it's understand that this myth is out there because the actual credit issuers want you to believe it. So if you go, for example, to a city application for Home Depot or for Office Depot or Staples, okay, both of them are done through Citi. On the application, they'll tell you, don't even apply unless you've been in business for 3 years. So it's easy to believe that you need to be in business for 3 years to apply. But what a lot of people don't know is that even if you were in business for 3 months, you could go to those same sources. If you had 5 or 10 trade lines on your business credit report, they would approve you even if you don't have the 3 years they say that you have to have. So why do they say that? They say it because they don't want newer businesses to know about business credit. We have a saying here at Credit Suite that our typical customer is a small to medium business. Why? Because all the big businesses already have business credit. They already know how to get it. And that's what credit issuers are really looking for. Credit issuers they like business credit being on the down low. They like business credit being hush-hush. They like the fact that most people don't even know about business credit till they get CFOs and controllers and get so big that they're doing $5, $10, $20 million in revenue. They like that being their customer. So they try to keep the little guy, the startup, the people that aren't doing millions, kind of under wraps by not knowing that they can apply to get the same kind of commercial credit the big credit or the big companies can do. How do they do this? Simple. They try to turn you away by telling you, you can't even apply unless you have 3 million in business sales. You can't even apply unless you have 3 years in business. But the real truth behind it is that if you go to those sources and apply and they pull your business credit report, which they always will, and if they see 5 or 10 trade lines, they're going to approve you, even though they're clearly telling you you need longer time in business and you need more revenue to qualify. Don't get me wrong. Some sources like American Express are pretty tough to get unless you've been in business for years or have millions in revenue. Almost all other credit issuers will absolutely give you business credit even if you just started your business, as long as you have the trade lines reporting. So don't get a shelf corporation to get longevity for your entity just to build business credit. You don't need it. It's a complete waste of money. You can set up a brand new legitimate entity today, not pay the thousands for the shelf corporation, and still build the same amount of credit that somebody that bought a shelf corp that makes themselves look like they've been in business 2 years has. So if you're using a shelf corporation because you're a contractor and you need to have time in business to bid on contracts, okay, I get that. I bite. I think it makes sense. But if you're buying a shelf corporation to build business credit because someone has convinced you that the longer you're in business, the more credit you get, don't do it. You're wasting your money. Trade lines matter most in business credit building. Time in business doesn't. So, excuse my rant. I've got a lot of comments, so let me make sure I address those before I move to the next point. But for bank funding, don't you need history 2 years or better? Okay, for bank funding, they don't need 2 years in business. What they need is 2 years of tax returns. So if you buy a shelf corporation, you still don't have the tax returns they need. Look, here's a little known secret. Lenders do not even look at your corporation startup date in a lot of cases to base how long your business has been open. They look at when you open the business bank account because they're aware of shelf corporations. They know people try to fake this. So what they do is they come in and look at when you open your bank account, and they really look at how long you've been in business based on that in a lot of cases for business loans. You can't fake that. Shelf corporations don't come with seasoned bank accounts, so lenders know what to look for to know if you've purchased it or not. Second thing, Banks aren't stupid, guys. They know the entity has changed hands. When a new owner takes place and takes actual ownership of that entity, the records show that. So lenders see that you just took ownership of that entity. So banks are looking for 2 to 3 years of tax returns, and you're not going to have 2 to 3 years tax returns with a shelf corporation. So I got my Office Depot and Staples within 3 months. Michael says, exactly. You got Office Depot and Staples within 3 months, even though I can clearly show you that their commercial application says you have to be in business 3 years. So this myth that you have to be in business for years to get business credit is perpetuated by the actual credit issuers who don't want people like Michael and the other people out there that aren't doing millions to know that you can still get this kind of credit. But don't go and spend thousands on shelf corps. As Michael just said, you can easily get the same results even if you just started and are new into business. Okay, so that being said, let me see if I have any other questions. No other questions. All right, never take anyone. All right, so let's move on. And again, somebody else said never take someone else's headaches. That is a great point in itself, okay? And Frankie, I was just actually on your live stream today, as a matter of fact. Okay, so this is what you need to keep in mind. Okay, when it comes to headaches, that's exactly what happens when you buy a shelf corporation. Think about this. When you take over an entity, you are responsible for that entity now. So if that entity has outstanding lawsuits, judgments, things that you didn't know about when you purchased it, you're now the one that's liable. So when you take ownership of an entity, you very well could be taking on somebody else's headaches without even knowing about it. That's one of the serious risks that you face with buying shelf corporations. Is not only will it not help you build business credit, but you're also taking on any legal issues, any judgments, any debt that you might not know of the minute you take ownership. You very well could be taking on a lot of people's headaches, as Frankie just mentioned. Okay, so start off with Mike. Well, Michael Citron, thanks for coming in. Start with Granger. Yes, Uline, Quill first. Those are the kind of vendors that you can easily use to start building business credit. How do you get your first trade is what Natasha's talking about. So there's a lot of ways you can get your first trade. The easiest thing to do is go to Quill, go to Uline, put $50 worth of stuff in your shopping cart, go to checkout. When you go to checkout, they're going to ask you, they're going to give you an invoice me option. Don't give them your credit card. Choose the invoice me option, and they're going to ship the items in most cases, and you were just issued credit and didn't even know about it. And that credit reports to the commercial credit reporting agencies. If it doesn't work like I just told you, then pay for the order, place a second or third order, and by the second or third order, you will get approved. And now you're building business credit the legitimate way without spending thousands of dollars for shelf corps. Michael says, buy something, pay it off, and he's giving the exact answer. If anyone here is watching, get it with Ty's team. They make it. I appreciate that. Thank you very much, Frankie. You know, like I said, it's cool that you're here because I was just on your live stream with the hoverboards and stuff earlier, which I thought was awesome. So here we go. So they're sometimes used for contractors, not the best for business credit building. Historically, okay, they had a purpose because historically it took a long time when you filed a corporation to actually get access. But now that you can do this online and it's so easy and fast, you just don't need them. So we've debunked this myth, right? Time in business is not what matters when it comes to business credit building. The main factor is the number of trade lines you actually have. The other thing to keep in mind with shelf corps is that shelf corps are looked at unfavorably by regulators, lenders, and business reporting agencies. So, hey Shannon, thanks for coming in. So here's what I like to say. Never do anything that regulators, the business credit reporting agencies, banks, and credit issuers say they do not want you to do. Well, because they don't want you to do it. Guys, you are not smarter than Dun & Bradstreet. They've been around since 1841. These guys have done billions of dollars of revenue. They know a lot more than you do. They know the tricks. They know how this stuff works. So if you're in there trying to fool Dun & Bradstreet, Experian, Equifax, Bank of America, Chase, all these credit issuers and lenders by trying to convince them you've been in business longer than you have, you're not going to do it. They know what to look for. They know to look for the change of ownership in the corporation. They know to look at your bank account start date. They know to look for these other factors. Your business credit report says the amount of revenue you have, says the number of employees you have. So does it make sense that you have a shelf corporation that's been in business 3 years and have 2 employees? Probably not. So there's a lot of things on a commercial credit report that we can easily look at and see if we're looking at something legitimate or not. And this is why when you look at what Dun & Bradstreet and these sources say, this is exactly what they have to say. So Dun & Bradstreet, from Dun & Bradstreet, it's unclear whether it's illegal to use shelf corporations to access credit. It is clear, however, that it is deceitful, unethical maneuver that serious entrepreneurs avoid. Guys, think about this. If you're buying a shelf corp to buy business credit, would you really want to do it to build credit with a company like D&B who says what you are doing is deceitful, unethical, and that's something that anybody that's a serious entrepreneur should avoid, okay? So that comes from Dun & Bradstreet themselves. Now, if you also come in, you can also look at an FDIC alert right here that says shelf and shelf corporations can be created domestically, However, they can be and have been used as vehicle for common financial crimes such as money laundering, fraudulent loans. They're telling you now that when using it to try to get a loan, to try to convince a lender that you're someone you're not, fraudulent is obviously an issue. Fraudulently purchasing by virtue of ease of information, So you can see here, guys, this is even from the FDIC. Or an FDIC alert. So the bottom line is the government, the bureaus, they don't like this stuff. So what happens is what we see is people purchase shelf corporations and Dun & Bradstreet red flags and shuts down your commercial credit report. That's what happens. Okay, we see it happen time and time again. People come to us, they bought a shelf corp, and now their business is shut down. This isn't consumer credit, where we're regulated by the Fair Credit Reporting Act. This is the Wild West. In the commercial credit world, these guys can do whatever they want to do. So what's notorious, especially with D&B, if D&B knows you're building credit and it's a shelf corp that you're doing it for, they red flag and shut down your profile and it's dead. So what happens now is you bought a shelf corp for thousands, you built legitimate credit on top of a fake shelf corp, and now all of a sudden you're back to square one because they shut it down if they find out, and now you're not able to even use the credit profile. So this is what happens when you play in a space where you're trying to basically con lenders, the business credit reporting agencies, credit issuers. When you're trying to con these guys, you don't come out on the winning side of that oftentimes. And even years later, after you built legitimate credit, you still face the legitimate risk of now losing access to that credit report because you did it in the wrong way to begin with. Okay, and I want to go ahead and just answer any other question. Just applied for Dun's number. Congratulations. Do I wait? Yeah, you do. You don't need to. Quill, Uline, they won't even ask for a Dun's. Some, like Gimplers, will, but you don't need to use it to apply for Uline Quill. D&B will sniff you out. Just get with yes. You are right. D&B will absolutely. My clients never knew half this, and Frankie, I appreciate that. Thank you for going extra mile, and I appreciate that. I didn't either. Yes. Guys, this is why I'm teaching it, because I don't want you to waste money doing things that will eventually get you in trouble or eventually get you shut down. Okay, so shelf corporations unfavorably is how they're looked at. Many consider them unethical, borderline illegal. Okay, if a business reporting agency knows that you have a shelf corp, they will red flag your profile and shut you down. And again, as I said, most lenders now look at account start date as the date that you're actually starting the business. They're not looking at They are not looking at account start date. They're actually looking at your bank account established date instead. You are liable for anything bad that happened in the corporation you buy. We've talked about that. And again, trying to fool lenders, credit issuers, or business reporting agencies typically results in failure. And that's what it really comes down to, is that, look, why are you buying a shelf corporation? It's kind of like a CPN number. Are CPN numbers actually legal? You can get a CPN. They're designed for people with extreme privacy, but you can't use your CPN in place of your social. Then you're committing fraud because you're misrepresenting your social security number. Not an attorney, just telling you what you'll find with any research. Shelf corporations is the same way. If you're buying a shelf corp to try to fool a lender or a credit issuer into thinking you're more established than you are, it won't end well for you, because they know what to look for to know what you're trying to do. And in most cases, it will get you red flagged, it will get you shut down, or if nothing else, it will get you denied, and it's not going to get you to your end goal. So bottom line, don't end up in business credit jail. Avoid shelf corporations. They don't help you get what you're trying to get. Any legitimate company can build business credit even as an actual startup. Okay, and that being said, I want to look. So That being said, if you have any questions, type them in and let me know. But I don't want to waste a bunch of time on this. I just want you to see what DNB, what FTC, what these guys have to say about it. Understand the goods, understand the bad. Is there a legitimate reason for shelf corps? Sure. If you're a contractor and you need to have an entity that's open longer to be able to bid on contracts, maybe that's something you choose to do. But don't use it for business credit building. It can actually get you more in trouble or cause more harm than it can good. There's a lot of liability you're voluntarily taking on that you might not want to. Things that could happen in that entity that you'll be responsible for that, you don't need to take that on. And it doesn't help you at all build business credit. No matter what anybody says, you can still build business credit as a startup if you know the vendors to go to get your initial trades, then use that established credit to get the credit that you want to be able to obtain. You don't need to do this. You don't need to be an established business to do it. You can still do this even as an actual startup business, okay? So that being said, I'm going to go ahead and wrap this up. If you have any other questions, type them in. If not, you can type them as a comment in our stream after it's actually live, and then we'll still be able to answer and respond to any question or inquiry that you have. So keep tuned, because in the weeks to come, we're going to be looking at CPNs and breaking those down. We're going to be talking about what happens when you try to buy trade lines, and we're also going to do 2 different sessions on 10 different kinds of financing you can get for your business, even if you have bad credit. So if you're trying some of these tactics because you have bad consumer credit now, there's a lot of loan options. We're going to discuss about 20 of them in the weeks to come, and business credit building as well on top of that. So where's the next webinar where you'll be looking at business credit profile? I don't know if we're going to be doing that on live streams. We used to review Experian reports. Experian does not like that. So we have a new relationship with NAV where any of our clients can access business credit reports right through our system, but I don't yet know if we're going to be pulling business credit reports and reviewing them anywhere soon. We've done that with CreditSafe. CreditSafe just didn't pull results for a lot of people. So stay tuned. Once we get that ability, we'll do that more often. So if I buy a shelf corp, can I use it to bid on government contracting? Sure, you can. That's the only legitimate purpose that I've actually seen it used for. But the question is why do you? Can't you bid on that without the shelf corp? If you need the longevity to bid, then it might be something worth considering. That's really not my area of expertise. Mine is using it for the building business credit purposes, which doesn't make a lot of sense. But sure, if you're looking for longevity to bid on contracts, it actually might have some legitimate use there. It's probably about the only legitimate use a shelf corp may have. So I'm going to wrap this up. Thank you all for tuning in. Every Thursday at 11, we're here live on Facebook. If you missed this, go back and play it. It's on our Facebook page, facebook.com/credit suite. And I will see you next Thursday at 11 o'clock here, where we're talking more about getting loans, what you need to know about CPNs, trade lines. We've got a busy 4 weeks ahead with a lot of cool topics we're going to jump into. Thank you all for attending. Thank you for coming. Thank you for going back and forth in the conversation. And thank you for sharing. I look forward to seeing you next Thursday at 11 o'clock here on Facebook Live. Thanks, everybody.